Hey everyone, welcome back to this channel. So if you're new here, I'm Rahul and this is the place where we break down money, investing and real world wealth build strategies for regular people like you and me. I don't know about you, but in 2025, investing feels a little wild. Prices are up, tech is booming one minute and dipping the next. AI is taking over half of the headlines. Everyone wondering where should we put our money to grow over time. Well, that's where ETF comes in. So if you're someone who wants to build wealth for a long time without investing on single stock or even mutual funds, this is the video for you. Breaking down my favorite ETFs, how they performed, why they are important, and how you also can invest into them, even if you have only $50 or $100. Grab a drink, smash the like button, and let's get into it. Right. So before we jump into picks, let's make sure we're all on the same page here. What exactly is an ETF? ETF stands for Exchange Traded Fund. It's basically like a giant gift basket of investment, stocks, bonds, commodities, or even currencies, all bounded together into one package. And that package is traded on a stock exchange just like a regular stock. Example, let's say you love tech stocks. Instead of buying one share of Apple, one share of Microsoft, and one of Nvidia individually, an ETF like BOO or QQQ already has them bundled together for you. One purchase and boom, you own tiny slice of them. Here are some benefits of them. Number 1, diversification, which lowers your risk by spreading your money across dozens, hundreds, or even thousands of companies. Number 2, low fees. Many ETFs charge as little as 0.03 per year compared to 2% plus for mutual funds. Number 3, easy to trade. You can buy and sell them anytime the market opens, just like a stock. Fun fact, through 2025 there are more than 11,000 ETFs globally and more than $13 trillion invested into them, which is crazy. So why should you care about ETF if you are trying to build wealth for maybe next 5, 10 or even 20 years? Reason 1, compound growth. When you invest in good ETF or hold it for years, your return don't just add up, they multiply. Example, if you invested 10,000 into ETF growing at 9% per year, in 20 years, you would have over $56,000 thanks to compounding. Reason 2, passive wealth building. You don't have to constantly watch charts or trade stocks, you can literally set it and forget it. Reason 3, it's proven. History backs this up. According to BlackRock, the average annual return of US stock ETFs like VOO over the past 15 years is around 9 to 10 per year. Even factoring in bad years like 2008 or 2020, the long-term trajectory has been upward. Reason 4, safer than individual stocks. Not saying that individual stocks are bad, but if you bet everything on one company like Tesla and it tanks 50%, your entire portfolio suffers. With ETFs, even if one or two stock dips, your other holding balance it out. Now I would share my 5 best ETF for long-term growth. Number 1, BOO, which is like Vanguard S&P 500, which tracks 500 of the US biggest companies. 5-year return is estimated to be 86% as of June 2025. Expense ratio, which is pretty low, 0.03%. Why is it great? It is great because it owns top companies like Apple, Microsoft, Nvidia, Amazon, and many more. Covers multiple sectors like tech, healthcare, financials, energy. Number 3, rock solid history. You should consider buying a VOO. I feel like anyone who's looking for reliable, steady growth over long term, that's the good choice for you. 2, ETF is like QQQ, which is Invesco Nasdaq 100 ETF, which tracks 100 of the largest non-financial Nasdaq listed companies. The 5-year return is almost 130%, which is like if you invested money 5 years ago, your money would have doubled within 5 years. Expense ratio 0.2%, which is pretty low. Why is it great? It's great because it's heavy on tech and innovation like Apple, Tesla, Nvidia, Microsoft, Meta, and all the other tech companies, which is like top 100. Faster growth but slightly higher volatility. 2020, QQQ surged over 47% in 1 year. because of that tech boom. Even after the correction, it continued its uptrend. So who should consider buying QQQ? I feel like anyone who's willing to handle bit risk for long term, I mean high growth, I mean that's the good choice for, because maybe it has like higher growth return, but it's kind of a bit risky. But if you can handle it, it's great choice for you, because on the long term you would be in the profit, not loss. Number 3 ETF I would share is VT, which is Vanguard Total World Stock ETF, which tracks over 9,000 companies globally. 5-year return is around 70%. Expense ratio is 0.07%. Now, why is it great? It's great because it's exposed to both US and international markets, which includes companies in Japan, Europe, Canada, emerging markets like China, India. Even if US markets goes down, but Japan or India's market surging, your investment is still growing. Who should consider buying this ETF? Anyone who is looking for a global exposure without like investing in single countries, this is a good ETF for you. Number 4 ETF I would like to share is SCHD, which is Schwab US Dividend Equity ETF, which tracks high dividend paying US companies. 5-year return of SCHD is around 78%. Expense ratio is 0.07%. Now, why is it great? It's great because it pays a solid dividend, currently around like 3.4%, which is pretty good. It includes financially stable companies like PepsiCo, Broadcom, also Coca-Cola. Example, if you invest 10,000 in SCHD 5 years ago, you would have around $17,800 plus over 1,300 in total dividends paid out, which is pretty cool. Now, who should consider buying this ETF? People who wants like reliable income. I mean, this is the good choice for you. 4 ETF I would like to share is ARKK, which is like ARK Innovation ETF, which tracks disruptive companies in AI, genomics, fintech, and robotics. 5-year return is 40%, which is like not that good, but it's okay. I mean, expense ratio is like 0.75%. Now, why is it great? It's great because it focuses on future technologies, Tesla, Roku, Coinbase, etc. It has a bit high risk but high reward potential also. You have to be careful about this ETF. This ETF can drop 20 to 30% in a year, but when tech rallies, it can outpace everything else on the market. Who should consider buying ARKK ETF? Anyone who has more risk tolerance. As I said before, this ETF is a bit more risky because it's related to tech. I mean, you should consider buying it. Or if you are someone who doesn't want to take risk at all, I mean, stay away from it. Other ETF I love right now, you should also check them out, like VTI, which is like Total US Stock Market, EFA, which developed international market, Europe, Japan, or Australia, XITK, which is like small cap innovative tech companies, or XLF, US financial sector, big banks, insurance firms, etc. Now, how to invest into them? Like, go up and open the brokerage account like Wealthsimple, Questrade, or even if you're from US, I mean, I think you can go with Robinhood or Fidelity. Fund your account, then search for ETF like VO, QQQ, or anything you want, then just click the buy. Boom, you're done. You just buy the ETF. That's easy. Or if you want me to make a video in details like how to buy and everything, like creating a brokerage account, I can make a video. You can just let me know in the comment. Example with VOO. If you invested like 5,000 into VO 5 years ago, it would be worth like 9,300 today. But if you added 200 a month since then, you would have over 22,000 today, which is like crazy. Some final tips I would like to give you. Investing is not a gambling, it's like a long-term game. ETFs are great for those because it gives you huge diversification, it provides you lower risk and long-term growth, which is very necessary. Remember, I'm not a financial advisor. You always should do your own research before you buy something or you invest your money into something. That's all. If you learned some things from the video, please hit the like button, subscribe to the channel, and hit the bell icon so that you don't miss my next video, because I'm going to make great videos later on different topics. And comment down below what ETFs are you looking into to buy, and I'll be replying to your comment. Thanks for watching. I will see you on the next one. For now, bye bye.